Good morning, class 12. Children, proceeding with the NPOs, the not for profit organizations. We had begun with the chapter. I told you that there are, besides the profit seeking entities, these are those organizations that do not exist for earning the profit. The main motive of these organizations is different, is not to earn profit, like hospitals. They provide treatment, they render treatment to the patient and the sick. The charitable institutions, the religious institutions, the entertainment institutions like clubs. So the main purpose, the motive of existence for these type of organizations is not to earn profit. That is why they are called not for profit or non-profit organizations. We had discussed this, but even if they do not exist to produce profit, to generate profit, but still they have to keep some account of their incomes and expenditures. Whatever is being received, wherever they are paying, all those records are being maintained. They have to be maintained. For recording all these type of transactions, wherever certain finances are being used, they maintain certain accounts. These accounts I had discussed with you are similar to the profit seeking organizations. Their accounts, in place of trading account, they make receipt and payment account. The receipt and payment account, I told you, is a summary of cash book. That means all the cash transactions are recorded, or cash transactions of the NPOs are recorded in the receipt and payment account, the RP account. That is called RP account. And I had discussed in detail the features of the receipt and payment account with you. Then, replacing the profit and loss account of the profit seeking entities, we make here the income and expenditure account. Since I told you the motive of not for profit organization is not to generate profit, so we cannot calculate profit for these organizations, but to keep a record of what all is generated, that means incomes and the expenditures. The IE account or the income and expenditure account is maintained. This also we had discussed in detail. I had given you the income and expenditure account, what all items are to be maintained there. We had discussed all that. All the revenue receipts and the revenue payments are being recorded in the income and expenditure account. Now today we proceed with the next type of statement that is prepared by these accounts, that is the balance sheet. Balance sheet similar to the balance sheet of the profit seeking organizations. The salient features of balance sheet are similar to those that we have learnt earlier in those profit seeking organizations in class 11. What we had learned, the first thing, that this balance sheet, this records only the capital items, because you remember the revenue items are recorded in the income and expenditure account. So the first feature of balance sheet is it records only the capital items. The capital items like the legacies, like the entrance fee, or any other capital item which is one-time item. All the assets, all the liabilities, all the capital funds, all those things, any fixed assets purchased, sold, all those things are recorded in the balance sheet. In case, now then we record in the balance sheet the assets that are purchased, the purchase of assets on the asset side, plus the assets purchased. Under the assets, we write the assets purchased are added to the assets in the opening balance sheet, and assets sold are according to the opening or closing, depending upon the date of happening of the incident. The assets sold are subtracted from the assets and then recorded on the asset side. And the depreciation is always provided after recording the sale of or purchase of the asset. Then next thing is the closing balance of cash and bank also is recorded on the asset side, which is given in the receipt and payment account. The closing balance of cash in the asset side under cash and bank. Bank may also show bank overdraft. In case bank overdraft of the bank balance, then it will be on the liability side, otherwise asset side. Then the next thing is only the net amounts of loan will be shown on the liability side. Net amounts means the loan that is existing in the last year balance sheet, add the new loans in case taken, or in case repayment of loans, subtract those type of loans. Next thing that is taken in the balance sheet is the specific donations. I discussed with you there are two types of donations for the NPOs to record: the specific donations and the general donations. The specific donations are donations which are meant for some specific donation for building, donation for a swimming pool. So any donation somebody has given for a specific purpose are called specific donations, which are taken on the liability side. In case, and general donations are revenues which are taken on the credit side of income and expenditure account. Then special donation, special funds, in case any funds are created, the funds will be always shown on the liability side. We will deal in detail of the funds, how to maintain and record the funds, but they are shown on the liability side of the balance sheet of the income and of the NPO. Outstanding expenses or advance incomes, always liabilities. All this we know. So just a quick revision. Then opening capital fund. The opening capital fund will be recorded there. The adjustment made, the capital fund is the capital that is given to you in the opening balance sheet, in the question, in case it is given to you. That is the opening capital fund. Add the surplus, or as shown by the income and expenditure account, or subtract the deficit in case it is shown in the income and expenditure account. And then you make adjustment for those four things I told you: ELLD, the entrance fee, legacies, the life membership fee, and the donations. We will deal with this just now. So girls, this is the way how we start with the balance sheet. Now the next thing that is important for us to know is the preparation of income and expenditure account from the receipt and payment account. The income and expenditure account will be prepared. These things should be known by us when we prepare the income and expenditure account. These things should be known by us. Just a revision, not a revision, just an update before we start preparing the accounts. The first thing that is to be taken in consideration is admission fee. Children, admission fee or entrance fee, it means the same, the admission fee or the entrance fee. This is whenever children, a new member that is admitted, a certain amount is charged from him in the name of admission or the entrance fee. It is shown on the, it is given to in the question on the debit side of receipt and payment account. And now I told you there are two ways to treat this, two ways, two opinions to follow. And generally what is taken, it is given to us that since it is taken once, so it will be taken on the income and expenditure. It is capitalized. Sometimes they consider that entrance fee, one member will give the entrance fee only once, so it can be capitalized. Or in case it can be taken because it is a regular feature. For that NPO, it's a regular feature. Every time, every year, members will keep entering. So admission fee for the organization is not one time. It is regular. In that case, it is shown on the credit side of income and expenditure account. And then in the amount will be added to the capital fund in the balance sheet in case it is treated to you as capital, in case it is given to you that you have to treat in the capital receipt. But in case no specific information has been given, the entrance fee, you may take the entrance fee as revenue receipt only, and you may show it on the credit side of income and expenditure account. Next is subscription. The next important amount is subscription. I had discussed the subscription with you, the difference of subscription. Subscription is an amount. So subscription, this is the amount paid by the members for the non-profit organizations for a periodical renewal of membership. So this is the main source of income for any NPO. It will appear on the debit side, it will appear on the receipt side, the debit side of the receipt and payment account. and subscription related to the current year will appear on the credit side of income and expenditure account. But then you have to give those adjustments. I told you 4 ways to adjust the subscription. 4 ways to adjust are not different. It is the adjustment that we take. You always have to remember subscription outstanding at the end. Outstanding at the end means it is outstanding at the end means it is added on the credit side. Wherever subscriptions are given on the credit side, it will be added. Where you write the subscription of the income and expenditure account credit side, this will be added. Outstanding at the end is added, and because it is outstanding, subscriptions outstanding are assets for us. Asset side of balance sheet. So this is the first treatment and this is the second treatment. Subscription outstanding at the end. Then subscription advance in the beginning. So one thing, beginning means opening balance sheet. Beginning means opening balance sheet. On which side subscription advance is always a liability. It will be given on the liability side of opening balance sheet. And since it is outstanding at the end, and advance at the beginning will be added. And second thing, it will be shown on the liability side of the opening balance sheet. Then next is outstanding at the beginning. Outstanding beginning. One thing you should always remember, beginning means it is opening balance sheet and it is asset. Subscription outstanding, income outstanding is always asset. Income received in advance is a liability. So outstanding is always, this is also an asset and this is also an asset, is an asset. And this will be outstanding at the end is added, outstanding at the beginning is subtracted. And the last is subscription advance at the end. End means closing balance sheet. It is closing balance sheet. And subscription received in advance, this is, what will this be? It will be a liability. Advance is always a liability. Outstanding is an asset. Outstanding is in this also and this also. Outstanding is asset and advance is liability. It will be given on the liability side. It's going blurred. Why is it going blurred? Anyway. And will be subtracted. These are the 4 ways the subscription will be treated. Now after this, then comes the life membership fee. Then comes the life membership fee. Life membership fee added, this will be added directly to the capital fund. Capital fund, or shown separately on the liability side. Then comes donation. Donation, I've told you, in case a general donation or donation of a small amount, it will be shown on the credit side of income and expenditure account. But in case it is a specific donation or a donation of a big amount, it will be shown on the liability side of the balance sheet. Liability side of the balance sheet. Then comes legacy. Legacy is a capital amount, liability side of the balance sheet. Sale of old assets. Sale of old assets. Now children, sale of old assets. Now the old assets are not, this sale is not an income, but this is a assets are being sold. So it is a capital receipt and will not be shown on the income and expenditure account. The sale proceeds will be shown on the asset side. The deduction from the asset. And the profit or loss on that, profit or loss will be shown in the income and expenditure side. Income and expenditure. The profit and loss that is occurring because of sale of the old asset, that will be shown in the income and expenditure side. Then comes sale of Newspapers. The sale of old newspapers. Children, the amount realized from the sale of old newspapers, magazines, or the sports material, periodicals, this should be treated as income and credited to the, it is credited to the income and expenditure account. Then comes the salary, rent, expenses. All the salaries, rent, and expenses, these are the treatment. All the expenses, they are shown as the expenditures. Income, and these are revenue, income and expenditure account as expenditures. And adjustments to these will be given to you. Adjustments are similar. Outstanding at the end will be added, outstanding in the beginning will be subtracted, advance in the end will be subtracted, and advance in the beginning will be added. And liabilities and all that also are taken in the same way. Next, now we come to the sale and purchase of the consumable items, the consumable stock. Children, in the non-profit organizations, the purchase of consumable stock, the purchase of all the consumable stock. Consumable stock are the items like stationery. You cannot take them as fixed asset and you cannot treat them as being paid. So that is consumable stock. That means the stock that is purchased and will be consumed in 1 year. It could be medicines, it could be some bar material, playing cards for the recreational, the clubs, or any such thing. The religious institutions, the any agarbatti, candles, all these things, matchboxes, all these things are the consumable stock. You have to maintain stocks of these things. So the total payment made during the year to the suppliers of consumable stock are credited to the, it will be shown to you in the receipt and payment account. And it is an expense, so it will debit it to the income and expenditure account. This will be taken, the adjustment will be made and it will be taken on the income and expenditure account. Then comes honorarium. What is honorarium? Honorarium means the payment of any honorarium. This is the amount that you are paying to people whom you invite to give special lectures, any special special seminars they conduct, any special orientation program they take. So it is an expense for the organization, income and debited to the income and expenditure account. Now comes the government grant. The government grant, a very important thing. The grants for all these organizations, children, any schools, colleges, the public hospitals, they all depend upon the grants that are extended by the government for their functioning. The recurring grant is in the form of maintenance, that is treated as the revenue receipt. It is taken every year. So this amount will be credited to the income and expenditure. But sometimes there are very big grants or any specific grant given to, and this is like donation only. So in case it is a general, it will be take general grant, it will be credited to the income and expenditure account. But in case specific or a very big amount of government grant, it is transferred to as there will be a fund created for that, transferred to that fund in the balance sheet. Then in the end you balance both the sides, the income side, expenditure side, and in case the incomes exceed, it will be surplus. In case the expenditures exceed, it will be a deficit. That is the making of the income and expenditure account. That is how we take the income and expenditure account. Now we'll start doing the questions for these income and expenditure account, and then I'll tell you the fund based accounting also. For some funds, we have to take some funds into consideration. What are funds? And when the funds are created, those items are neither shown in the income and expenditure account nor anywhere else. They will be a special fund that will be shown in the balance sheet. How these funds are created, I'll tell you in the next video.